Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Monday, July 10th, and then we'll see how things look for Tuesday, July 11th. Please be aware that there's a full-length video that goes through everything that I talk about that I just cover as bullet points in this video. What are some comments that we can make about Monday? The equal weight index for the S&P outperformed the S&P 500 weighted index, and mega caps ended up underperforming. There will also be a rebalancing of the Nasdaq 100 to reduce overconcentration in the index by redistributing the weights. Right now, you have some of the bigger companies that have more of an impact on the Nasdaq 100. They want to try to fix that, and that will be effective prior to the open on July 24th. The new weightings will be determined by where we close on Friday, July 14th. You've got a few people that are trying to front run that a little bit to try to get ahead of it to see if they can figure out how things will be weighted. There were two Federal Reserve District Bank presidents that made more negative or hawkish comments, and one that made more of a dovish comment. Daily Investor said that inflation remains too high and that more rate hikes will probably be necessary to bring inflation down. And then on the other hand, you had President Bostic, who said policy right now is clearly in restrictive territory and he's willing to be patient. So we're getting a little bit of conflicting information from the Fed. Value and small cap stocks did outperform on Monday. On a short-term basis, we're still keeping an eye on our stochastics. Intermediate term, we're keeping an eye on the oscillators because they're starting to show some negative divergences, and I do have that chart to show you. The dollar was down and interest rates were down. All of the yield curves that we follow remain inverted. Sentiment hasn't changed. It's still extreme positive at 78. Our trend is still positive. The green line's on top, but the green line is declining and the ADX is dropping below its moving average. But both the moving average and the ADX continue to be above 20. Our bias is mixed and our momentum right now is mixed. The economic reports that came out, not really influential. We had wholesale inventories which came out unchanged. They expected it to be down 0.1%. Last time it was down 0.3%. Consumer credit was a lot less than expected. It came in up $7.3 billion. They expected almost 3 times that at $21 billion. Last time it came out, it was at $20.3 billion. Here's the intraday chart where we had a positive open above the unchanged level. We went right up to the daily pivot, fell back down, actually went negative. That set the low for the day before getting back into positive territory. And then there was some kind of a buy program right at the end, but we ended up closing below the daily pivot. Here's a chart that we're keeping an eye on. This is the correlation between the VIX and the S&P. We're starting to go above this dashed line. When it finally tops out and starts to come down, that's when we try to evaluate things. Most of the time that ends up being negative, but there's sometimes when it ends up being positive. So we'll just have to look at the context at that time. Also for right now, we're above the 20-period moving average. That has been providing some support. If we fall down below that, then we're probably shifting a little bit more negative. We're seeing where the vortex is crossed over below the red line, so that's turning negative, and it's also below this one level, which is the midpoint. Here's our oscillators chart, where we're seeing some negative divergences. The S&P made a higher high, but we're seeing a lower high on all of our different oscillators across the board. Now, on one hand, that has to do with mathematics and how these things are calculated. On the other hand, a lot of folks are seeing these negative divergences and they go, wait a minute, this is happening, and that ends up being a self-fulfilling prophecy. We're also seeing a negative divergence with the RSI based on 14 periods and 9 periods. Again, where the S&P made a higher high, but we're making a lower high on the RSI 14 as well as the RSI 9. We did see some improvement with the transports. They were able to close above this previous high, so that gives support to the market. And down below, we see where utilities continue to show weakness, which also can give some support to the S&P. We're looking at the ratio where it's going up between the transports and the S&P. For this to really be more positive, we want to see this ratio continue to advance. We're also keeping an eye on this 61.8% retracement level for the Nasdaq. We've not been able to break above that. Also, we haven't been able to break above the previous high on the Nasdaq 100, but we're still above a support level. The NASDAQ 100 BPI is continuing to show some improvement. We thought we had a major sell signal here where it was starting to show some weakness, but now it's starting to come back. This is a new chart. I would recommend a YouTube channel called Stock Market Cycles. That's where I got the basic idea for this. And I have 4 charts that I'm going to show you. 2 for the S&P and 2 for the NASDAQ 100. The first thing that we look at is the S&P weekly chart, and this is an arithmetic scale, or if you want to say it in a normal way, arithmetic. This is not a log scale, which most charting software uses a log scale. Well, I switched it out of that. And if you draw a trend line where here's a couple of lows, then we had some resistance, a lot of resistance, more resistance. Then in 2018, we had a high. Then the 2020 high, which is right before the COVID plunge. This looks like it could be pretty helpful. But if we extend it all the way to where we're at right now, we've already broken above it, and it's not really telling us anything. But if you change the scale to a log scale, and you only go back to the high in 2018, which I showed on the previous chart, and the 2020 high, which I also showed, and then extend that trend line forward, we might be hitting into some resistance. Other times when this happened, it ended up being pretty negative for the market. We just want to be aware of this, and then we'll use other charts to try to confirm if we're actually starting to show some more weakness or not. Then we have another weekly chart going back to the 2009 low for the NASDAQ 100. We draw that up, matching up some lows that we set here. And if we come up to where we're at right now, this could also be providing overhead resistance. Again, we want to look at some confirmation from some other charts before we base everything on what's happening right here. But I want you to be aware of this. Another chart that we look at is the NASDAQ 100 ratio to the Dow. The NASDAQ 100, these are tech stocks. These are speculative stocks. These are stocks that sometimes can get out of hand, which is why the market's really been going up in 2023. Well, at some point, do they go up too far too fast? When you compare them to the Dow stocks, which are the 30 bluest of the blue chip stocks, well, we go all the way back to 2000 and we look at this ratio, and this is where it topped out right before we saw the dot-com bust. And then for a number of years, we just kind of chopped our way higher, and so forth. Well, now we're getting back to the point where we're at an extreme level. And as of Friday's close, this ratio was at 4457. It could still go higher. We could match this previous high. But when this has happened before, look at what happened after. Is that going to be what happens this time? We'll just keep an eye on this. We need to be aware of that. And if we start to see more weakness, it could really feed into the overall market. All right, what's our outlook for Tuesday? The CPI will be released on Wednesday, which is highly anticipated. And the PPI will be released on Thursday. We're still in a positive stance technically, with support continuing to hold. Really, nothing has changed since Friday's session, but we want to be aware of further weakness. It could turn things more negative. We have the NFIB Small Business Optimism Survey coming out, and then the list of geopolitical events with the market really fixated on inflation and interest rates. That'll be a big issue on Wednesday when CPI is released. Here is the updated calendar for all the economic reports that will be coming out with CPI on Wednesday and PPI on Thursday. Here's the updated schedule for Fed Speak. One of the speeches already happened. The next one will be on Thursday, given by Governor Waller. The Stock Traders Almanac statistics look pretty good for July 11th. We're neutral to positive with the Dow and S&P, where we're more positive with the NASDAQ being up 71.4% of the time. On Tuesday, that will be the 6th trading day of the month. And then I've also marked in here when CPI is released, when options expiration happens, and then when the Fed will make their announcement. And then we're keeping an eye on this, where the NASDAQ tends to do well up until the middle part of July. Our scenarios, not going with the down one yet because our technicals are still positive, but things could turn more negative if we see some really convicted selling. So we're still defaulting to the positive for right now because our technicals are positive. We're not going with the sideways trend because our ADX is below the moving average and it's declining even though the green line is still on top. Warning signs, the longer term trend signals, which I just showed you in those charts, they may be signaling a top. We don't know that for sure. We want to look for other confirmation. We just want to know that this is happening. The oscillators are also diverging negatively. The VIX is still showing a lot of complacency and acting weird, which is why we look at the S&P to VIX correlation chart. The cumulative new highs, new lows for the NASDAQ continue to show weakness. We're still above that level set back in 2007 on the 3-month yield. When it comes back down, is that giving us some kind of a warning sign? S&P growth continues to weaken, even though it's still in an overall uptrend. The Vortex indicator has crossed over negative. The green line is crossed below the red line, and they're both below the midpoint. Earnings season is starting to ramp up again, and it could be positive or negative depending on what company reports. The positive signs, we still have the seasonality and setups that remain in the background, and I went over those in the weekly video. The daily chart for the Special K is positive. The weekly chart for the Special K remains negative. Our longer-term equity put-call ratio is still positive because it's declining. The S&P is still above the downtrend channel upper line. We're still in a risk-on posture favoring stocks over bonds. The transports are improving. They were able to close above that previous high. Lower price levels so far have been providing support. The S&P is outperforming utilities. The NASDAQ, which has that 61.8% retracement level, that's still above where we're at. And with the NASDAQ 100, the previous high is above where we're at. They're continuing to look pretty strong, but they need to get above both of those and close above those. The Staples to S&P 500 ratio continues to decline, which often gives support to the S&P. The Russell 2000 index did give us a golden cross, where the S&P small cap index has not, but the mid caps have also generated a recent golden cross. Small cap and mid cap growth is still positive. So our conclusion, the S&P is still positive for right now, but if we see a lot of selling and break support, that's going to bring in some weakness. In the short term, we're still positive. We're not overbought right now. Intermediate term, we're positive, but we need to see some more follow-through buying. Long term, we continue to be positive. Thank you. I hope you found this helpful. Please feel free to check out the full-length video as well as the other videos that I have posted over the weekend. Have a great day, and I will talk to you in the next video.